The US economy is set to transform in 2025, and in this video, I'm going to show you how to uncover investment opportunities that most people overlook. President Trump just stepped into the White House this January with plans to implement sweeping changes to the United States government and economic policies. Now let me be clear. The purpose of this video isn't to dive into politics. There are plenty of voices doing that already. But to demonstrate how these shifts can open up unique investment prospects. Let's start with why this matters. In 2024, the US economy is worth roughly $28 trillion. Our GDP measures every dollar of spending in the economy. Every savvy investor wants a stake in the direction the economy is headed, because that's where the biggest growth opportunities lie. Yet, many fail to realize that the largest spender in our economy isn't you or me, nor is it even private corporations. It's the government. With a new president comes new economic policies that alter the flow of money. When a leader like Trump proposes dramatic changes such as deporting millions of illegal immigrants, imposing tariffs on China, or handing out substantial tax breaks, someone is bound to profit from these shifts. Here's a little secret. Wall Street will always find a way to make money off whoever holds the White House, by analyzing how these policies will redirect capital. But until now, the average person didn't know how to tap into that. That's exactly what I'm here to explain, so stick with me until the end. Before we proceed, remember that making investment decisions requires 3 key criteria. First, the investment must be legal. Second, it must be financially sound, ideally you'll profit. And third, it must align with your personal moral values. I won't dictate what's morally right for you because my moral compass might differ from yours. My goal is simply to show you how money could move, so you can make your own decisions based on this 3-pronged approach. Let's now look at 7 of the biggest proposals President-elect Trump has mentioned so far. 1. Mass deportations. 2. Imposing tariffs on multiple countries. 3. Increasing military spending. 4. Deregulating financial service companies. 5. Investing in space exploration. 6. Deregulating the oil and gas industry. 7. Delivering substantial tax cuts. I'm going to break down each one to explain how these changes might shift the flow of money and create distinct investment opportunities for you. Keep in mind a couple of important points. Investing is inherently risky. You're never guaranteed a profit, and in fact, losses are part of the game. Always do your own due diligence and don't blindly trust a random YouTuber. If you're a passive investor who just puts your money in a broad index like the S&P 500, then you might not need to worry about these political changes. That's the always be buying strategy. Buy when markets are up, buy when they're down, and let the market do its work over time. If that's your approach, you can probably skip this video. But if you want to be more active and find niche investment opportunities beyond standard trades, then this video is for you. More active involvement comes with higher risks and potentially higher returns. Just remember, if a recession hits, all these opportunities can vanish quickly, so it pays to be a smart, informed investor. Let's focus on the changes Trump is proposing in these 7 areas and how they might reallocate money. Though that doesn't automatically mean stocks will skyrocket, other market forces are always at play. For instance, when Trump discussed mass deportations, who really benefited from that policy in a business sense? Private prison companies did. NBC News reported that private prison stocks soared after Trump promised mass deportations. Investor Business Daily noted that Core Civic received a significant upgrade in its forecast for ICE detention beds under Trump's incoming administration. You have to decide what aligns with your moral values. My job here is to lay out the financial shifts. Next, let's consider tariffs and how they might create investment opportunities. A tariff is essentially a tax. If companies like Nike, Ford, or Walmart import goods from China, they might now face an extra 25% cost per item. This could force these companies either to pass on the cost by raising prices, accept lower profit margins, or move manufacturing domestically or to other countries. Although we can't predict exactly what will happen since this is still a proposal, if manufacturing does return to the United States, several industries could benefit. More domestic production might boost demand for real estate, railroads, and other supporting sectors. For example, the CEO of CSX mentioned that as long as goods are coming into the United States, they'll need to be transported somewhere, benefiting railroads. Now let's talk about investing in the military. During his campaign, Trump emphasized boosting U.S. military spending. Remember, military equipment is produced by private companies, not by the government. So increased military investment could mean larger contracts for U.S. defense contractors like Lockheed Martin, which is publicly traded. However, we can't say for sure which companies will benefit, or if mismanagement, like what happened with Boeing, could offset those gains. This is where your financial research becomes crucial, understanding how money might move based on Trump's proposals. Next, consider Trump's push to deregulate financial service industries, effectively rolling back regulations on Wall Street. Regulations can protect consumers but also hinder business operations by adding extra rules. Trump's aim is to ease these restrictions so banks, investment firms, and hedge funds can expand their activities. Some worry this could create a bigger bubble, which is why staying financially educated and protected is so important. According to S&P Global, investors drove up bank stocks following Trump's 2024 election win, as markets expected reduced regulation starting in 2025. Many investors are betting on further deregulation to boost Wall Street revenues. Moving on, let's examine investing in space exploration. During his first term, Trump initiated the Space Force, sparking interest in space-related investments. Recently, several pure-play space stocks have rallied. Rocket Lab up 41%, Intuitive Machines up 28%, Spire Global up 26%, Planet Labs up 16%, Redwire up 15%, and SpaceX, if it were public, also showing gains. Although there's a lot of speculation here and nothing is certain until policies are implemented, many investors are excited about the prospect of space exploration as a long-term opportunity. Next is deregulating oil and gas, another area Trump has spoken about openly. CNBC recently reported that increasing LNG exports and leasing more federal land for drilling are top priorities for the oil and gas industry under Trump's potential second term. While I'm not an oil expert, it's clear that deregulation could make operations easier for companies in this sector, possibly boosting production and profits. However, there's always the risk that such deregulation may negatively impact renewable energies and the broader energy market. Finally, let's touch on corporate tax cuts and stock buybacks. Although Trump has hinted at significant tax cuts, we don't know the details yet. Generally, larger tax cuts lead to more corporate stock buybacks. A stock buyback is when a company uses its funds to repurchase its own shares, thereby reducing supply and boosting stock prices. While this can benefit investors in the short term, it doesn't create real value for the company and may even harm employees or the overall economy. For instance, Delta's massive stock buyback in 2019 helped inflate its stock price, but then the pandemic hit, leading to layoffs and a multi-billion-dollar bailout. All these shifts from tariffs to deregulation, increased military spending, and space investments demonstrate that our economic landscape is about to change dramatically as President Trump takes office. However, none of these proposals are guaranteed to pass, and their impact could be altered by external factors like a recession. This is why financial education and understanding your investment strategy are so crucial. If you prefer a passive investment approach, sticking with a broad basket fund like the S&P 500 and always be buying might be best. But if you want to actively seek out niche opportunities and are comfortable with more risk, this is where you need to pay attention to where money is moving. Remember, the long-term debt cycle may only happen once every 50 to 100 years. And while we've seen short-term recessions, like the 2008 financial crisis, the key question remains, where are we in this long-term cycle? As Ray Dalio noted in 2019, we might be very late in this cycle. So what does very late really mean for your investments? Thank you for watching, and I hope this breakdown helps you understand the possible financial implications of Trump's proposals. Stay tuned for more insights and make sure you're financially savvy as we navigate these changes together.